We welcome Anthony Pompliano, founder and partner of Pomp Investments. Pomp, good to see you. Sporting the hoodie as usual. So when I hear something goes from contrarian to consensus, I sort of think, is that a good thing, really?
Yeah, it's a great question. I think there's a couple of things to note here. So first of all is adoption happens in cohorts of Bitcoin, and it's happened in reverse. So first we got the individuals all across the internet, millions and millions of people pseudonymously adopting this digital store of value. We then started to see this year organizations. So we saw a kind of end of last year into this year, corporations, both public and private, also financial institutions started to actually allocate to the asset class. And then we got one nation state that started as kind of that third cohort. So you go individuals, you go organizations, the nation states. I think the key piece is that it had already gone from kind of a contrarian to consensus idea in individuals. But 2021 was really the year that we saw the mainstream Wall Street organizations and also corporations say, hey, look, I got to have a strategy. The strategy may be I'm going to sit it out, but I at least have to have the conversation to go ahead and figure out, should I buy some? Should I not? Should I build a company in the space? Should I build a product? What am I going to do in terms of the Bitcoin strategy? And I think that ultimately is a tailwind for the industry.
I'm assuming you're a bull in terms of Bitcoin price action in 2022, Anthony. So I'm wondering, A, where you think Bitcoin is headed in 2022 and what you think the biggest catalyst is going to be of the ones that you named. I mean, is it going to be more corporate adoption? Is it going to be more nation states adopting Bitcoin as currency?
Yeah, so I think there's a couple of things. So back in 2019, I basically said, look, I think Bitcoin's going to hit 100K by the end of 2021. And really the thesis was simple. It was, look, we're going to get the halving in 2020. 18 months later, usually we see some sort of blow off top. We didn't really get the blow off top. So for 2.5 years, called for a 10x, we got about a 7x, which I think was a little surprising. One of the things I'm watching, though, is that 18-month time frame may be off. We may actually be seeing longer bull markets now rather than kind of those 18 months one that we've seen before. Time will tell. Hindsight will be kind of 2020 on that. But I think that's one thing to watch. The other thing that I'm watching right now, and I don't think we have enough data yet, but over the last couple of weeks, I've seen a couple of analysts talking about this idea that Bitcoin's price is actually tracking correlated to the 10-year Treasury yield. And so now you would think that most risk assets, as the interest rates get raised, we should see risk assets actually sell off, right? If you go all the way back to the 99 dot-com bubble, a lot of people would point to interest rates being a key factor for kind of popping that bubble. But if Bitcoin's going to actually trade alongside it, again, we do need more data. But if that is true, in some crazy way, raising interest rates could be bullish for Bitcoin. Now, I haven't had enough time to see enough data nor think through enough of why that may be. But I do think that's something that investors probably aren't thinking about right now. And it would go counter to the narrative of what we've seen in terms of some of the macro thoughts. Again, let's wait to see what data happens here. But if the Fed does raise interest rates and we continue to see Bitcoin's kind of price track that Treasury yield, that'd be very interesting and I think a surprise to many people in the market.